All right. Hello, good evening, ladies and gentlemen, and welcome to the session. I hope you can hear me loud and clear. And let's get our Facebook Live session for Portfolio $2,000 in cash flow with I'm Possible Terence. Let's get it live. Let's get it going. Okay. Now, so if you're listening to me right now, can you drop a comment, leave a note, say hi? All right. And of course, I would like to know who's joining me in the live session today. All right. So if you're live with me, drop a note. All right. So I know who's joining me for today's session. Okay, just let me get through some admin matters. If you're joining me for the first time, all right, please click on this website called streamyard.com/Facebook. All right, it'll bring you out. It's a pop-up page, right, and you'll see a Facebook logo. All right, okay, and then click on it. All right, so they will approve your Facebook profile. Right, when you join us and actually leave a comment during the Facebook live session. All right, so that will help me in terms of replying, right, to you in person. All right, and to actually be able to call you by name. All right, now, so this is what I mean over here, right? If you don't go to the website and approve your profile, this is how we see you, right, on my end, right? Not on your end, but on my end. All right, so this individual over here, right, I can't address you by name because I don't know who it is, right? If you can go to the banner that I've mentioned earlier, here you go, streamyard.com/Facebook, and then click on the approve button, right? I will be able to address you personally by name after, okay? All right, now, thank you very much. Now, so let me remember to remove the banner, right, before I have all of you screaming at me once again. All right, and of course, all right, I will not miss out on the disclaimer before I start the session. All right, so this will be a session where I will discuss some personal traits or personal actions that I'll take. All right, but please be aware that all forms of all forms of investment, all right, all forms of investments and trading bears a risk of loss. Right, so please be aware of all the risks involved, right, before you decide to follow any of these trades on your own accounts. Right, please take all these trades as educational purposes, right, but they are by no means any form of recommendations in any way or sorts. Okay, I'm just sharing with you my ideas, right, of trades that I'm doing, I'm looking at, and how I put it in my accounts. All right, so please be aware of the risk. All right, now, so that is out of the way, and let's get today's session going. All right, hi Eileen, hi Jia Mu. All right, okay, hi Susan. All right, hi Constant. All right, hi Mansing. We have another Facebook user. All right, okay, so Facebook user, you know the drill, okay? All right, and Patrick, all right, hello to you as well. All right, now, so thank you for joining me even at this late hour. All right, and of course, all right, another difficult Friday markets. All right, but without further ado, let's get the session started. All right, now, and I will always go through the typical, all right, which is we will always first look at the SPY. Now, so for those of you who are new to the stock market, what is the SPY? As you can see on the description over here, all right, the SPY is basically the S&P 500 ETF shares. Right now, so by buying the SPY, right, you're essentially owning the S&P 500 index. Yeah, so I'm taking this as a representation of how the index behaves, where the risk is, where the benefits lie, right, and we have our analysis from there. All right, now, so 1 week ago, we are probably hitting the bottom, as you saw over here. All right, okay, and 1 week later, all right, we are almost halfway back there again. All right, so we had this massive rally on Monday and Tuesday. Sorry, kind of 2 days in a row. So if that actually left many of you puzzled, right? Okay, I'm going to tell you a little bit of hindsight, all right, of why you should not be, all right? Because if you're aware of what happened last Friday was actually the last day of the month and also the last day of the quarter, all right? So many portfolio managers, right, has to dress up, right? We call this the professional term portfolio dressing. Now, by dressing up, what we're really saying is that portfolio managers, right, will start making their portfolio look pretty, all right, pretty in a sense to display it to their clients, right, at the end of the quarter reports. So they're going to take out stocks, all right, from their portfolio where the charts actually look absolutely terrible. Yes, all right, even if they're performing, but the charts look absolutely terrible. Yeah, okay, they're going to take it out, all right, okay, and then we can start putting some stocks temporarily for a couple of days, all right, that looks exceptionally good. Right? Why? You may be asking. That's because, right, as long as they own the stock, right, at the end of the quarter, right, they are entitled to show the stock's name and the symbol inside the report that goes out. Yeah. Okay. So that leaves their clients, right, seeing that, all right, hey, even my performance is down or is not too stellar, right, but the stocks that I see are actually looking pretty good. right? So questions won't be asked. Yeah, all right. Now, so that's something that goes into the concept of portfolio dressing and why portfolio managers would do something like that, right? But notice that this Monday, right, and Tuesday was a new month and also a new quarter, right? So once the new quarter starts, it's a clean slate. That means everything starts afresh. So these fund managers can actually dump, right, the shares that they bought last week, right, and then put the money back into those high-flying stocks that they were not performing for them before they had to sell it. You see how this game of how where the money goes, all right? Okay, now, so that's why we had this big jump over here on Monday and Tuesday, all right? Especially where, fund managers are trying to left chasing, right? Those that were late were chasing after the pack, right? They just kept buying and buying and buying, right? But once all those buying is done, once all their portfolio are reloaded up again, then the question lies, where are the rest of the money going to come, right? Where is it going to come from? Yeah, all right. Now, if you tie it in, right, to also what we call, right, is this correct? Right, if we tie it in, oh man, yeah, there we go. All right, if we tie it into the dollar index, right, you can actually see, all right, that the last market boom, right, actually coincided, all right, with down days on the US dollar. All right, so the US dollar has been very, 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 very strong. Yeah, okay, all right. But when the US dollar weakened, all right, we had those good days in the markets. Yeah, okay, all right. So it has to do a little bit with the dollar weakening, right? But that's not what we have over the last two days over here. All right. So with the dollar strengthening again, it's putting a lot of pressure, right, on the market, and that's why we're seeing it back red again. Yeah. Okay. All right. Now, so that's an interlink, right, between the two. All right. But let's go to the SPY now. So what are we on the SPY? Can you see now that the SPY is trading back inside this downward channel? Right now, this downward channel started sometime in August, right? And now it's back in play, right? We burst up, right? As you saw over here, it burst up, right? Okay, and now, right, it's weakening again. So where's my target basically, right? My target is this, the sell-off that you're seeing happening right now, right? Today is pretty bad because it's a gap back down, right? It's also a gap to close this other gap that we saw over here. Yeah, okay, all right, now. So the thing now is, I actually think that this market can go and hit, right, this support level over here, right? And this support level was at the low of June, right? Okay, and that's around the 3,620 level, right? Or let's just round it off and say 3,600, right? So the index, right, or the SPY, right, is going to pretty much trade around this area, right, or what I feel before we get the next bounce, right? But something that's good over here is this. Right, if it does hit the support level and bounce, right, okay, it's a pretty strong bounce off a support price. Second, right, okay, it's also pretty good, right, or looking pretty good because if that happens, the RSI is probably going to hit somewhere around 35 and then bounce up. All right, and that's going to set up what we call a positive divergence. Yeah, okay, all right, and that positive divergence can actually drive the algorithms to start buying if there's upside momentum. Yeah, at least in the short term. Right now, so there's something good about the markets, right? But of course, there's a lot of heavy weight. All right. Now, heavyweight in terms of interest rate rises, the Fed is not done, everything is not over yet. Right. So we are still expecting more. Personally, all right, okay, if I'm, I may be wrong. Yeah, okay, my comments are probably like 1% worth. Yeah, okay, all right, but I think there'll be two more rate hikes, right, of maybe 0.5% each, right, to bring it up another 1%, close enough to the 4% mark. All right, I believe that once the Fed hits around or close to that 4% mark, 3.754, all right, it's going to hold it there. It's not going to turn around and drop immediately, no, right? But once they hit that, they're going to hold it, all right, and then let the economy start to settle down. Yeah, okay, but I do see that there are probably two more over here. Yeah, okay, now, so with that and with that knowledge over here, all right, how am I going to position my portfolio? Or is there any actions that I can take at all today, right, to increase cash flow, to increase income? All right, so let's go ahead and take a look right now, okay? Now, so let me load up the portfolio. I should do it. I should do it this way. Okay, looky look. Right now, So let's go through stock by stock very quickly. All right, we still have our WBA at $45, right? And the stock has pretty much plummeted to 31. It's a new 52-week low, right? But as I say over and over again, it's a fundamentally strong company with huge amounts of cash reserves, so I'm not worried about my dividends, right? In fact, I'm about to receive a pretty good dividend really soon, right? Okay, I'm just waiting and biding my time, right, for the stock to recover. Yeah, okay, so unfortunately, the stock price is too far, right? Okay, so I can't sell any calls to collect further income as well, right? So now I'm just hitting it, sitting and holding. Yeah, all right, sitting and holding. Now, next, I have a position in Intel as well at 42.50, right? So Intel right now is about 26. So these two stocks are pretty much in the same position, right? I'm holding, right? The company is not about to go bust, right? But the company has been severely punished even after I got in when I thought it was cheap, right? So what can I do, right? It's the worst possible time for you to get out of the position at this moment, right? You don't get out of a blue chip stock when it hits rock bottom, right? Especially when they're still fundamentally sound. If you ever do that, right? If you go further by 6 months and you look back again, I promise you, you're going to regret the decision. Yeah, okay, I've done this, I've seen this over and over and over again, right? I'm never going to make such a mistake ever. Yeah, okay, right now, next one very quickly, right? We have ANF, right? So I took delivery of ANF stocks at $18, right? Today it sits at about what? 1507, all right? And let's see if we can go generate some income, all right? Okay, because many positions are currently, unmovable at the moment, all right? So I want to see, right, if I can use ANF to actually generate any form of income, right, on my positions over here. All right, now, so let's go to November, all right, and I'm going to look at the 18. And there you go, looky. All right, okay, we can actually get some pretty decent premiums for the 18 call. All right, so today it looks like I'm actually going to create some income. All right, so if you look at my portfolio, I own 500 shares, right, of ANF. That will allow me to sell 5 call options, all right, on ANF to collect income. And look, my portfolio over here, all right, is built to achieve cash flow. It wasn't built with the intention to get, sorry, it wasn't built to achieve the goal of capital gains. So in this instance, if I have to sell my ANF stock, right, at $18, I'm going to break even. Right? But by selling the call option today and collecting, let's say, 45 cents, right, I'm generating cash flow. All right. And to me, that sounds like a good decision. Why? If market continues to stay like this, right, ANF may bounce to 16, it may bounce to 17. All right. Okay. But it may fall short of 18. So by collecting 45 cents, right, I've created cash flow on a position, right, that doesn't allow me to really move it. All right, and I don't have those additional capital to continue to deploy as well, right? So this is pretty much what we call management. Yeah, okay, so I'm going to go ahead. Give me a moment. Okay, I'm going to go ahead and allocate, all right, to my ANF over here, all right? Now, so I'm going to allocate 18 calls, all right, for the month of November. All right, so like I said, I'm trying to sell it at, I'm trying to sell it at 45. All right, okay, my order is in over here, but it's not taken yet. Yeah, okay, so it's not taken yet. So I'm just going to sit around and wait for it. Yeah, all right, so I'm going to sit around and wait for it and see what happens. All right, but for the moment, all right, it's still working over here. All right, and my order is not done at the moment. All right, so once it's done, I'll keep you posted. Yeah, all right, and hopefully before the end of the session so that we can see and record it down. Yeah, all right, now, so that's one trade I'll take today. All right, and let's assume, that this trade was actually filled. Okay, now if this trade was filled, how much cash flow would it actually add for our portfolio? All right, ANF is going to be 22. All right, so it's going to be trade 22. All right, ANF calls for 18 November. All right, for 18. All right, let's leave the date blank, 45. Right now, so if we do get it filled, all right, I'm actually going to generate $225 US for the month of November. Yeah, all right. Now, so this position doesn't expire to November, all right? So I can actually allocate all the cash flow that I'm going to collect if this order gets filled, right, to the month of November. All right, now, so that would add up, all right, to 200 and 225 and sets me to about $400, all right, for the month of November, right? But this is not filled yet, okay? All right, so this is not filled yet. So we'll wait and we'll see. Yeah, now going back. Okay, going back, our next position is VZ. Oops. All right, there we go. All right, so we have VZ over here next. All right, and our stock is at 50, and our VZ right now is about 37. Yeah, all right, now, so this stock I'm still going to hold as well, all right, not much actions, all right, but I will be pocketing the dividends that I'm paid, which is 65 cents. Yeah, all right, okay, now, so that's going to be paid out pretty soon as well on the 6th of October. In fact, that's yesterday. I've already pocketed this gain. Nice. Yeah, all right, now, so what's 65 cents, right, times how many shares do I have? I have 300. All right, so let's do this. 6525 times 300 shares. Now, so that's coming close to about 195 US dollars, right? 195 US dollars. I know some of you are going to say, but Terence, there's a withholding tax. That's fine, right? Even if I include the withholding tax, which is about 30%, I'm still left with about $137 in cash flow, right? While I'm waiting for the stock to go up. It isn't that bad. Yeah, all right, isn't that bad. Right, but true to my portfolio, right, I'm not going to change my rule suddenly just to my advantage. No, right, I'm not going to record the dividends, right, because that's just not how I do it. Yeah, okay, so I'm not going to, include it in this picture just to hit those goals and look pretty. No, all right, you only include the option premiums. All right, now let's go to our next one. All right, AT&T, right, for 18. Right, it's 15 right now, so we sit and we do nothing. There's 2 weeks to get us out of trouble. Yeah. All right, now KSS, a $30 puts. All right, KSS right now is at 27. All right, so there's still time. All right, it is actually possible. Yeah. All right, now, so the reason why I say there's still time and it's possible, right, is because, all right, let's do this. Right, recently we had a bounce, and the high of the bounce actually got close to 28. Yeah, all right. So it is still possible within 2 weeks for this stock to start actually catching a better bounce. Yeah, okay. All right, now, so we'll wait and see again. Right, we may be able to roll this position to the next month and generate some additional cash flow. Right, I'm not saying that we can get it entirely out of trouble. Right, that's a hope, that's a wish. Right, but it's definitely not a strategy. Right, but as long as we get a bounce, right, I may be able to move it further and create some cash flow instead of owning the stock. Yeah. Right, now, next one, TSN. All right, TSN. All right, I'm fully prepared. All right, for myself. All right, to end up buying those stocks. Yeah. All right, I'm preparing myself for this position to buy up those stocks. All right, and I'm gonna collect the dividends. All right, on the end of November. All right, at the end of November. Yeah. All right, so we'll wait and see. Now, next one, Gold. All right, Gold, which is Barack Gold as a company over here. All right, now, so I'm going to hang on to this position. It's 1571 today. All right, and looky, look, we are actually not in trouble. All right, we are not in trouble for this trade. Yeah, all right, okay, now, so we're just going to hang on over here. There's about 2 more weeks before this expires. All right, so we'll play a wait and see. All right, it doesn't benefit for me to close it today because it's going to cost me about 29 cents to close it. All right, okay, and we've still got half the premiums left. Right, half the premiums left with 2 weeks to go. So I'm going to sit and I'm going to try to collect everything. All right, now next position is HBI. All right, HBI, Haynes Brands. All right, okay, now, so this one, all right, is at 9. All right, and now it's about 720. All right, with a PE ratio of 6. I'm pretty okay with this. I'm going to hang on. Now, next, we have Pfizer for 45. All right, and Pfizer is now at about 42.40. All right, so this one definitely has hope to it. All right, so we'll wait and see as well. All right, now, next one, we have OMF at 35. All right, OMF is now at about 31.70. All right, so this one, all right, I'm also aiming for the same thing, right, to get closer and for us to switch it around to a further month and generate some cash flow. All right, that's my wish on this trade over here. But let's see if it happens. All right, if it's not, I'm fully prepared to take up the shares. Yeah. All right, and our last position that we overloaded last week was actually on eBay. All right, so eBay is a $35 put option. right? And eBay right now has gone to 37, right? So we're pretty much okay on this trade, right? But this one doesn't expire to November, right? So no further actions on this one as well, right now. So let's get back to our ANF and let's see if we can get anything going on ANF. Right, doesn't want to bite me. Let's see if I can move something. No, it's not in the mood to bite. Ah, man. Ah, man. All right, I moved it to 40. I was thinking of taking 40. All right, but then it moved further. All right, so I'm not going to move anything lower than that. All right, so now my order sits at 40. All right, but somebody took what was available away. So now I'm queuing again. All right, now, so that's pretty much it. All right, I'm not going to lower it any further. So I'm going to leave this order there. All right, and if it does get filled, I'll just update with a comment, right, to actually this Facebook session. Yeah, all right, okay, now, and then we'll record it together next week. Right now, so that's pretty much the portfolio for this month. Yeah, all right, I still hit my target, right? If you notice over here, let's see if we got it right. All right, let's make sure our calculations are right. Yes, from this one to this one over here, right, 59. Yes, that's right. Okay, now, so we did hit $2,200 for this month. All right, okay, it's not end yet, right, but it's well within our goals, right? And yes, we are still off the mark with $200 for November, all right, unless our call options get filled, all right, and right now it has to be lowered, right, to about $200 if we do get filled. Yeah, right now. So I do have some time, all right, and I'm more than happy to answer some questions. So if you have any questions for me, all right, just serve it up, all right, and I'll be more than happy to help you with that. All right, now, so first question over here, hey, Terence, all right, on TSN, I'm actually assigned the stock, then so be it. All right, so be it, because our trades here on Friday, all right, okay, they're pretty much sold as a portfolio put. If you realize the label over here, all right, okay, and I actually, I have actually ended up holding some stocks, yeah, okay, all right, due to this assignment as well. All right, so like I said, all right, if you do decide to follow any of these trades on your own accounts, you have to be aware of all the risks involved. And this is one of the risks. If the stock does go down, be aware it's still a good company. It's not about to go bankrupt anytime soon. All right. So, when you buy a blue chip stock, in theoretical terms, right? When you buy a blue chip stock and it doesn't go in your favor, what do most people do? They hang on and they wait. Right? If you look at this, right, it pays a 46 cents dividend, it's trading at a 6 PE. All right. Do you believe that Tyson Food, right, is running into trouble? If it is not, all right, then business as usual. Right? The stock market doesn't like it, but business as usual, they're still going to make money. You just need to wait for things to turn around. Inefficiency will achieve efficiency sooner or later, especially when it comes to good companies at severely undervalued prices. Yeah. Okay. All right. Now, so yes, Eileen, the next question over here: will the stock actually be assigned before the expiry date? Right. And this is actually a very common sense, logical question. Right now, before the person, the other party, that means the buyer of the put option, before they would choose to assign that option, right, it has to benefit them. Right now, so typically when we look at option buyers or put option buyers, you're dealing with two types of people. Number one, they are just the pure gamblers, right? That means gamblers who buy put options, right, and hoping that the stock will go down. So when the stock goes down, they will just sell their put option and take their profits. Can you see where I'm going? That's people who trade options. And then the other category, where there are people who actually owns TSN shares itself. They own the shares, but they're buying this put option for a downside protection, right? So they're buying the put option to protect their shares. Now, looking at this concept, if you actually own the share and you pay, all right, in our case, okay, all right, how much did the TSN cost? They paid $1.49. They paid $1.49 to protect their shares. All right. And this protection lasts until the 21st of October. So if you had this protection and you still had the stock, my question to ask you is this: does it make sense for you to give up early? All right. Because even if you give up early, you're not going to get any money back. All right, because if you claim the insurance, you're not going to collect any back. You're not going to collect any premiums back. Can you see where I'm going? Right? Yes, you can claim, but you can't get your premiums back. It's already paid. So yes, the customer has this protection, but if they claim now, right, they're not going to get any of this 149 back, right? But there's still 2 weeks left. So their job now is, do I claim now or do I wait and see for another 2 more weeks? Right? So it all depends. Right? The logical person, right, will actually say, oh, if there's some hope, then I'll just wait and see. Right? But if they feel, oh my God, Terence, it's hopeless, right, I might just as well end it now and then use my capital to put it somewhere else so they can work harder. If they ever think like that, then right, the stock will be assigned early before expiry. Okay, all right, Eileen. All right, so I hope that's like like a kind of learning point that you got today. All right, and Tiamu, right, AMD. All right, now you must be new with us. All right, you must be new with us because everybody in this channel knows how much I dislike AMD. Maybe I shouldn't use that word. All right, okay, how much I dislike AMD. All right, now it's not so much of a dislike, right, but it's just that in terms of AMD, valuation doesn't check out. Right, now let's take a look at how the valuation looks now. Okay, let's be fair to AMD now. Right now, so AMD made about 105, 113, 92, and 73. So if I were to add them up, right, a little bit aggressively, but I would say they make about 380, 390. All right, so AMD made about 380, 390 last year. And looking at this, right, the stock now is about 61. Okay, the stock right now trades at 61. So the PE ratio, yeah, it's about right. Okay, the PE ratio is about 26 times. Okay, right, 26 times. Now, let's be also very fair, all right, and have a look, right now. So what's some numbers that I want to look at? Yes, here we go. All right, now, so, all right, AMD has a current revenue of about 61, all right, 61 million or 61 billion, I'm not too sure. Yeah, all right, okay, now, so let's take their biggest competitor. Right. Okay. So obviously we know that the biggest competitor is Intel. All right. Okay. Now Intel, maybe because of write-off, right, this year, right, they may seem they're not producing as well. Yeah. Okay. All right. Now, obviously, that's why you see that the stock is punished as well. Yeah. All right. Okay. Then we have another one. Right, which is NVIDIA. Right. So NVIDIA makes about 35. Yeah, okay. Now, so NVIDIA trades at 40 times PE. All right, now, so imagine this, right? If AMD, along with the other chip manufacturers, right, are hit because of the slump in demand for chips, right? Do you think the stock market can hit AMD stock as hard as Intel? Why? Because Intel is the biggest market player. It's the biggest market player. It has the biggest market share. All right. Okay. And they're willing to hit it down to a 5 PE. All right. How about AMD? All right. Yes, I know some of you are going to say, but Terence, AMD has been slammed as well. Yes. AMD has been sold from 164, right, to 60, but it's still at 25 times earnings, which means that the upcoming earnings has to deliver. That's the pressure you face now. Right? If the upcoming earnings, which is on what? Coming really soon, right? All right, 1st of November, if AMD disappoints or if they come out and say anything along the lines that they're struggling, yes, they're going to be punished. And they're going to be punished very hard, very fast, to a point where you cannot get out. So what I'm saying is this: you're trading a very high-risk stock in a very high-risk situation right now because earnings is coming up. Yeah, okay. Do I like it? I don't like it. Why? It only has the hottest one chip that the market likes most. Does it have any more than that? Not really. Why? Because all the other basic chips are dominated by their bigger competitor, Intel, or maybe NVIDIA. Right? And yet, as the best chip category, they probably have to fight with someone else as well. All right. So competition is very stiff when it comes to this industry. Margins are very, very tight. All right. So AMD is having a good run. Right, but it wasn't like Intel didn't have a good run as well. It's very cyclical. Right, these two major competitors are taking turns, right? To be the one at the top, to be the one in the good cycle. All right, so Intel is bad now. Do you think you're just going to sit there and do nothing? Obviously not, right? They have tons of cash, right? So they're going to use whatever they can to get back on top. So once they get back on top, who's going below? Yeah, all right, okay. So you got to understand how this game works out, how this game plays out. Yeah, okay. So you like AMD? I'm not the person to comment really. Yeah, okay, because I don't like buying a hot stock. All right, okay. I don't like buying a hot stock in the sense that, look, if I'm wrong, right? If I'm wrong, let's say my valuation, right? I think it's cheap and I'm wrong, right? If I end up holding the stock and waiting for the price to recover, I'm not getting paid. So why should I hold it? If I'm not getting paid, why should I hold the stock? Can you see now? Where else, yes, I'm wrong on Intel, but while waiting, right, I'm actually paid 5.6% in dividend returns. That's a different situation. Yeah, okay, that's a much different situation. Yeah, okay, now, and next. All right, and look, right? So AMD only has a book value of $6. So if AMD doesn't turn things around, right, and they start to struggle, right, maybe because their chips are no longer popular or somebody has a better chip, right, and they're not making profits again, they have been through that cycle, right? Right? If they dispose of everything, right, the company is only worth 6 and you're paying 10 times more than that. In the current market environment where inflation is high, interest rate is going higher, right? Cost of borrowing money is going more expensive, which is technically bad for tech, right? And they don't really have a lot of cash flow because they have not made money for, like tons of years, unlike Intel. So I think there are a lot of challenges. Yeah, I think they face a lot more challenges. That's pretty much it. Yeah, okay. I may be wrong, but that's how I see it. That's why I'm not touching this stock. Just like why I'm not touching the video. Yeah. Okay. All right. Eileen, welcome. You're welcome. So in the meantime, I don't see any further questions. Right. So I'll take it as though the rest of you are happy, all right, with what we discussed today. But before I part, I do want to say that I hope you enjoyed the session today, that you managed to pick up something to learn, something new as well. All right. And yes, am I frustrated? Yes, a little, because I can't deploy more capital. And I'm also stuck. I can't create more cash flow. Right. But this happens. Right. This happens. All right. Okay. Because even in the elite category of athletes, right, they will have their off days. All right. So in this sense, this is pretty much what I would call the off markets. Right. But they don't stay for long. Right. So once we hit a goal, we'll start scoring again and everything will resume normal. All right. Okay. Now, so we've done this for like what? I think close to almost 2 years now. Right. If you consider the first portfolio until now. All right. Okay. And this instances has only happened once. Yeah. Okay. So ain't that bad. All right. Once in 1 month. In that sense, once meaning 1 month. Yeah. Okay. So I think we are not faring too bad. Right. We're doing okay. All right. But it may be too early to say. So let's see. Yeah. Only time will tell. Right. That's why I'm choosing to do this live every single Friday. Right. In your eyes, and let you witness this. Yeah. Okay. Now I hope you enjoyed this session. And please, before I close it up, right, hit the likes button, hit the share button, right? Help me get the algorithms working, reach out to more people so we can help them learn how to plan their portfolios and grow their money, right? Especially in these difficult times, right? If you can do that, I'll be very grateful and I'll thank you in advance, right? And I'll see you next Friday, okay, ladies and gentlemen. All right, I'll catch all of you next Friday. Have a good weekend ahead, and let's hope the market will turn around, right, and share more positivity. I know many of you need that. Okay, thank you very much. Good night, and bye-bye, everybody. I'll see you really soon again. This is I'm Possible Terence, leaving you for now. Bye-bye.